Hey guys, we're heading into another beautiful weekend. My name is Mike Munzing with Munzing Mortgage Group, bringing you my mortgage update for the week, where I cover in this week what's going on both here in Orange County and California for the real estate markets. It's fantastic. Now, I was gone last week, so I didn't bring you an update. I was out of town a little bit, both with my wife on vacation, but also I went out to Las Vegas to the 9th annual International Conference on Climate Change. How nerdy is that? But I was out there with a bunch of scientists who were covering all the scientific aspects of what's going on. Trust me, we don't have much to worry about. We're okay. But they covered a lot of great information. I also had the opportunity to have my first big international interview with a gentleman by the name of James Dellingpole with Breitbart London. That was fantastic. I'm going to put a link to that interview both on the email that I send to you as well as down in the YouTube notes down below, so you can look down there for the link on that. And it was a great interview. I cover a lot of the municipal regionalist issues that are happening in our market, in our world, between cities and counties and governments that shouldn't be there. And I cover a lot of information that you need to know because it is going to affect your property values. It's going to affect our freedoms, our liberties, what we can and can't do with our property. Really important stuff. Once again, I'm on City Council in Aliso, Viejo. I'm also on a regional board called SCAG. So that's where I know about a lot of this, but bad things are coming, so we all need to know. Enough of that. This week, I want to encourage you to go over to my website, www.mikemunzing.com, grab my rate sheet, look at what the rates are, what we're doing out there. I got reports, a lot of good information on there. When you go to your open house, have good information with you. Now this week, we're going to cover a couple of reports really quickly, of course. Stephen Thomas's report, we often do that. Stephen's report's from actually last week, but it's his mid-year update, so he's got a lot of great information. You can get his report at www.reportsonhousing.com. It's a great report. It's a subscription report now that you get every couple of weeks. It keeps you up to date with what's going on for your sellers, for your buyers. Makes you extremely knowledgeable on how every micro market is doing. But let's take a look at what Stephen is talking about here. He goes back and talks about, all the way back to kind of the crash in 07, 08, 09, what happened in the market then, but jumps more into 2012. That became the year of the cash buyer. A lot of cash buyers came into the market. Then as it rolled into 2000, the markets got a little bit hotter and that appreciation jumped up. He covers a lot of that. Appreciation got heavy duty, and that brought us to 2014, where our inventories were low in January and they have skyrocketed. So let's see the overall breakdown here. He does talk about active inventory and what's happened in 2014. We kicked off the year at about 4,733 properties, and we've since jumped about 60% to 7,550 properties now, a big jump, and that relates to the demand out there. Now the demand, our buyers, is what he looks at as demand, our buyers that are in escrow. Demand is still strong, but demand is very realistic. Our buyers are not jumping at every property out there. They're not willing to pay the overpriced, over listing priced homes that our sellers are putting out there. They're not willing to do that. They're being restrained, which is good. We need them to be. And that's been what's going on with the demand. Expected time on market has nearly doubled since the first part of the year to average over the whole county is about 90 days. Then we have the distressed sales, distressed properties, and that's still very low. It's dropped off consistently and remains low and should remain low. And finally, equity sellers on the market have jumped by 42% in just this part of the year. This is the first half of the year or so, and that is because the housing prices have jumped, makes those sellers equity sellers, which is fantastic. Stephen also puts a great overview chart here. You can pause this video and blow it up and look at this chart, and that'll give you an idea what's going on. He covers some really interesting numbers here, but you can take a look at that. I want to keep going. We've got 2 reports to get to. So active inventory currently, I want to delve into that. In the last 2 weeks, inventory is jumped by 3% or 187 homes. And that brings us, as I mentioned a little bit ago, to 7,550 homes. We've got demand currently in the last 2 weeks. I'm gonna look at what's happened real recently here. That is down about 276 homes or 10% drop in properties that are in escrow. And that brings us to 2,477 properties currently in escrow. And finally, distressed sales breakdown. It's actually up 7%, but that number is so low, it's negligible. And that's what's going on with the distressed properties. Now, when it comes to California state as a whole, I use PropertyRadar.com. And now their report just came out a day or two ago. I want to bring that up, and you can find that report at www.propertyradar.com. It's the old foreclosure radar, folks. Sean O'Toole up in Northern California. Good guy, good friend, love that guy. And he's been doing a great job for a long time. So now it's PropertyRadar.com now that the foreclosures have dropped off so much. Quickly, let's look at what their comment is. They say double-digit monthly gains in median home prices are likely to be a thing of the past now that June sales are at the lowest since 2008. The June sales volume is way, way down. So that's going to mean that we're not going to get those big median sales or median price jumps that we've been seeing. It's going to really be leveling off. Still probably a little bit of an increase, but with the demand drop, we're seeing that leveling off to be sure. Let's look at some of these charts so we can get an idea what's going on. First, I want to bring up the home sales. Now, this is a month-over-month home sales chart. It goes back, I believe, to 2007 here. And you can see as it comes up, the month over month is up 0.6%, minor jump on that. The distressed properties, as is standard, is down 9.1%, but the non-distress is up 2.8% on this chart. The next chart is year over year. This makes it a little cleaner to see here, but you can see it's a little bit of a drop overall, but and that's 5.2, by the way, 5.2% drop overall, but we have a 10% drop on the big chunk there. The non-distressed properties have jumped by 10% because, once again, the distress are down by 43%, which is huge. The next chart I want to bring up is just taking a look at where people are, whether they're underwater, where equity is, as an analysis of the troubled homeowners still here in California. 16% of the property, 16%, if you can take a look on this side of the chart, are still underwater, still upside down on their properties. That's 1.4 million homeowners are still in trouble. But once again, it's only 16%. It was so much more a couple of years ago. That's an interesting chart there to be sure. And now all cash. How many buyers are coming into the market and paying all cash? This is a 2009 to today chart. You can see it's just up and down with a slight trend upward overall. And the last couple of months have leveled off at a level of about 27% of the home buyers, or overall between around closing on 8,000 home buyers, are all cash in California for the last month. So around 27% on all cash. All right, next is the foreclosure numbers and what's going on with foreclosures. I used to do whole reports just on this, but now it's such a minor part of our market. I just want to touch on it every month. And you can see continuously the downward trend. You can tell there's been a little bit of government intervention on that, obviously, because it is so consistent. The natural markets don't work like that, but the banks have mellowed out, the banks have backed off, the government has influenced that with longer turn times on that. And if you look here at notice of defaults, notice of trustee sales, as well as the overall closure sales on the steps of the courthouse are all down slightly. Year over year, you've got the biggest number is notice of defaults year over year are down 25%, and notice of trustee sales are down 24%. Very interesting chart there. Well, that covers a couple of reports quickly for us so you know what's going on, how we're looking out there. Now, the current market, as we mentioned early on, this last couple of months have really slowed with the buyers. That affects you, that affects me. and I hope that things do certainly pick up. I am here for you. You can reach me anytime at 949-689-5626. That is my cell phone. It's with me all the time. I've been out here 25 years. I'm here for you. I know what's going on. I've been in all aspects of the lending world. I do my own processing. I work directly with the underwriters and the lenders, so I know exactly how to get your buyers positioned to get their loan through, which is nice. I've got a vast array of investors who can handle FHA, VA, conforming, jumbo, even have some new construction lenders coming in the pipe. So keep that all in mind and call me, put me in your phone. That'd be great. Well, hey, have a beautiful, beautiful weekend. It should be fantastic. God bless you. God bless your family. God bless this beautiful country and all that we're enjoying here in this beautiful country. And once again, have a fantastic weekend. Call me. Bye-bye. Money, 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 money.